All right, welcome everybody to this week's client support webinar. My name is Bennett McDowell with TradersCoach.com. Today is October 2nd, 2024. All right, Jeannie, any messages for the day?
Well, first of all, welcome everybody, and do me a big favor and just give me a hello in the questions area. That is a really big help because it just tells me that the technology is working and that you know where the questions are. Hey there, Faye, thanks for your message. Awesome. And John, super, thank you. Great. Okay, so that means it's all working. That area is where you can type in your questions for Bennett today. Plus, he'll be doing a terrific he's going to be doing a terrific training session as well on a topic that I'm sure you're all going to enjoy. The other thing I wanted to mention is once a month we do a market review with Bennett on our YouTube channel, and that's going to start in about I guess about an hour after we complete this. So you can join us on YouTube. The link I just posted, give me a hello or a yes that you can see the link I just posted. There's a lot going on in the markets and in the world, so definitely tune in to the market review on YouTube. That's going to start in about an hour after we finish this. It's going to be really helpful. And also, we've got a terrific we're going to be doing a live event here in Tucson, Arizona in the beginning of the year to kick off the year. We'd love for you to join us. And I guess, Bennett, back to you.
All right, thanks, Gene. Okay, so let me take you through a few administrational items. Again, the purpose of the client support webinar is really a webinar for you guys and gals out there. So if you have any questions on any of the material that maybe your education material that you purchased from us, or perhaps any of the software, if you have any questions on that, this is the place to come and ask. So feel free to type those questions in. Now, with that said, I'm also going to cover today basically target zones. When you take a look at a chart, it's kind of a good idea to know where you think things are heading when you take a trade. I'm going to give you some clues about what we do as trend traders for looking for particular targets. All right, before we get to that, a couple quick things here. First, we want to let you know about the risks involved in trading. Every webinar like this has to advise you of this. There's no guarantees in trading the financial markets. It is possible to lose some or even all of your money trading the markets. Of course, our goal is to keep you from doing that, and we do it through developing a system with an edge. So you're winning more than you're losing, and also two, risk control, where you're capping your losing trades and letting your winning trades run. So all that's very important in becoming a successful trader. Nonetheless, we do have to let you know that trading is a game of probability. So please realize that past performance doesn't guarantee future performance. And anything that we discussed or you want to implement here, good idea to run it past your financial advisor to be sure it is suitable for you, because I don't know your personal situation. For you day traders out there, we got quite a few of them here today. I know many of you here, and basically, if you're new to day trading, this is a great place to go to get started, because basically they give you free data at Apex Trader Funding, and you have the opportunity to get funded there, and they do have a lot of rules there, so you got to follow their rules, but the rules are actually all implemented in order to make you a better trader. So it's all about risk control and basically trading within their realm of their statistics. So definitely check that out, and I'm going to put a link up here for you because you can get a lot of money off if you use that link, so definitely keep that in mind. And again, specifically for futures day traders, not for stocks. The data that they have is live data for all the major future markets like the ES, MES, NASDAQ, MNQ, oil, things like that. Okay, so if you enjoy doing that, definitely check that out. And as you know, we do run a trading room here at TradersCoach.com every Tuesday and Thursday. All right, so let me keep going on here. Books, all right, we've got plenty of books. My new book, The Art of Trading, is completed and done, and Wiley is putting the finishing touches on it. There are publishers, and it's due out this year, so pretty exciting. About 580 pages. My other book, Elliott Wave Techniques Simplified, published by McGraw-Hill, has been out for quite some time, and that is all about the Elliott Wave. And then, of course, we have several books on money management as well. When we look at software, many of you have our software tools already, but just as a reminder, we'll put a link below if you want to check out all our software tools. And a lot of you have the ART. Most of you, I think, have the OWL, PTFTL, and the ERI indicators, but we also have scanners and risk control software, and you can add on any of this stuff at any time. So I'll put a link up there if you want to learn more about it. Now, another thing we discussed last week was price action. And how many people out there trade price action? Price action is kind of interesting because it is pretty independent of basically any type of software. So we use it in conjunction with our software tools. And I find one of the best guys out there for price action is Al Brooks. And he's got a great course. It's 132 hours, so it's a big course, but it's only $3.99 and you get lifetime access to it. But he goes over all the price action criteria that's involved in trading the markets on any time frame and any market. And it's a great complement to the ART software. So if you're using ART, this is something that we also use as well. And everybody should become familiar with price action. It will actually make you a better trader. So I put a link up there in the chat area as well, if you can find that, where you can go to Al's website and check out his course. But again, I do highly recommend that. All right, so let me come out of here real quick and dive into some of the things I want to talk about today, and that is basically figuring out targets when we talk about trading the markets. So a lot of folks will enter a trend or enter a market, and then the question is, you know, where is it going, and when should I possibly get out? Of course, price action may take you out, but the idea is that you want to be always shooting for a target when you actually trade. So a lot of the targets we use, and if anybody feels, feel free to chime in here on things that you like to use for targets. But one of my favorites is fibs. The other one is consolidations, all right? So I've got just an intraday time frame. This happens to be a 5-minute, but this is a great example, but it can be applied on any time frame in any market. And basically here, our software is telling us, you know, this big move up, wave 3, we see that, all right, and then we get a pullback, and then we get eventually new highs. Now, a couple things here that we can do real off the bat, real quick, is first thing, of course, is let's figure out, you know, where that target is. And there we have it sitting somewhere up in this area here. And we came close to it, okay? It's always not an exact science, but pretty darn close. And at this particular point, we were expecting markets to reach there, all right? And we try to follow it up. You know, the pyramids do a great job with that, but we try to follow that thing up until we have a reason for leaving. And some of the reasons maybe you actually hit the target zone, and some of the reasons may be that the price action gets close, but then takes you out. In this case here. So Fibonacci's is a great one. Also too, all right, in entering a trade, you know, you have fib retracement. So let's just say you were thinking about when to get in. You know, there's also targets of when a retracement can become an entry. So here's your big move up, your retracement hitting the target zone, and then breaking out of the consolidation there for the next move up. So fibs become a very powerful tool for a variety of different types of target zones. So for example, this one here would be prices coming back down into the target for a buy, okay, in this case. So that would be one target zone there. We see this, for example, on a lot of the cryptos that pulled back into those fib target zones, and GBTC is one I'll show you next, and that is a great example of it as well, but it pretty much hit all the cryptos at the same time. So in any case, keep that in mind. Now, another thing to do in terms of targets, and let me just erase this. Oh, one more thing I'll show you here is that, let me come out of here and go into here. And notice here on this move up here, we've got a little bit of a green PTF. So PTFs can also be used as targets. So if you're long this market here and you have a green PTF, well, this indicator has a 75% accuracy rate. And when it's green, you find the highest price bar in the green area. And that is going to be a target because the PTF is saying there's a 75% probability that markets should eventually return and head higher. So that's also an excellent way to target certain price levels in a trade. So keep that in mind. So that's kind of a fun thing to do here too. So another thing in this whole situation here is that if you take a look at certain areas of bracketed or consolidating markets, that also can be an excellent place for making decisions and also realizing targets. So for example here, if I take a line here and just basically come across this target and this target like that, then here you have an area that if it returns to this area here, you see if the market rebounds from there. Now, sometimes they don't, sometimes they go down. But the point is that if it rebounds and breaks out of that consolidation, that's usually a pretty powerful move to the upside because now this acts as a support area. All right, so always be looking for areas of consolidation and seeing if it gets broken or not. And you'll find that's a big help as well. In fact, we had another one right here in this area here. So we had a little bit of a consolidation on the turnaround, and this time we went through it. So again, that's as powerful as bouncing off it. So consolidation areas can be actually areas of support, but if the market breaks through it, areas of resistance too, okay? So that's kind of a neat thing there. So you see this on all time frames for day traders, as well as position traders. They are everywhere. So keep that in mind. And when you draw in fibs, for example, what you want to do is you always want to anchor the fib. And basically Fibonacci's are part of standard drawing tools. So you never have to buy this. This is all pretty much standard package material. But let's just walk through real quick because a lot of people don't know how to draw these in. So in terms of basic fib retracements, you can start in a move, and let me get the right one first. You can start in a move here and go all the way up to the top of the move. And then when the market pulls back in this area, you should expect it to retrace down into the Fibonacci zone. And that zone we have feels based off our statistical studies is usually between 38.2 to 61.8%. So it's between these two blue lines. And 70% of the time, markets retrace to that area. 15% of the time, they go a little lower. And 15% of the time, they're shallow. And so that's how you kind of work it out. And so if you're looking to take a trade, one of your rules may be you're not going to take it unless you get a retracement into that target zone of the fib retracement 70% value. Now, one of the things that does happen, and you saw it on this one here, sometimes you don't quite hit the fib zones, you know, that 15% of the time, right? So what do you do if you still want to take the trade? Well, for example, if you come down here and you didn't quite hit it and it swung up, you right away don't want to miss the next trend up because maybe that's all it will give you. But by the same token, you realize it did not hit the high probability fib zone. So the trade is a little bit more risky. So what do you do? Well, what I usually do in a situation like this, if I see confirmation that it's moving off the bottom of the retracement, then at that particular point, I may take half a position. All right, if it dives back into the target zone and I see confirmation of a turnaround in the target zone, I'll take another half. That way I don't miss it in case it doesn't go into the target zone, but at the same time, I'm able to move my cost basis down on the trade if it goes back into the target zone for a better price. And again, you're gonna have to do this based on your comfort level and of course your risk tolerance. That's really super important. So on a fib retracement, you wanna anchor that at the bottom of the move to the top of the move. And if you're into the Elliott wave, all right, this is the ultimate bottom, and this would be a wave 1, 2, wave 2, and 3, wave 1, 2, and 3. And so then you can attach it on wave 2 and 3 to get the pullback of wave 4 and then wave 5 to follow, okay? So that's kind of how you do the fib retracements. Not too difficult, really. In the fib extensions here, all right, are basically 3 points on this case. So let's say we were drawing it here to here, just like a regular fib retracement, but then we anchor it on the pullback area, and this gives us a high probability zone here. All right, now the 15% area here under this is usually between the top of wave 3 and this first area. So 15% of the time they're shallow, 70% of the time they hit it, and 15% of the time they exceed it. And that's usually not exceeded by much, but sometimes it does do that. If anybody has any comments on this, or if they use this a lot, feel free to chime in, of course. But this is actually an excellent tool. And again, 61.8 to 100% is the target zone, the high probability target zone on the fib extension. So I think that's real important as well. And again, this happens to be a 5-minute time frame. And again, it happens on all time frames. So the next market I'm going to take a quick look at is, let's take a look at that crypto market here and see what's cooking on that. And that's going to be GBTC, because that gives us an excellent area here to look at. Actually, let me go to the longer time frames on GBTC. So we've done an intraday. Let's take a look at a more longer term chart. And I'm going to open up this daily chart. Okay, this is used by most people to trade the market, especially position trading, when you're holding your trading overnight. So in a case like this, all right, we start here at the bottom. All right, this is the starting point. Our first move up, our second move back, our 3, and then our 4, and here's our 5 target for an Elliott wave count. And again, all right, if you don't know the Elliott wave, you know, we have plenty of courses on that. I've written a book on it. But basically on this, the fib retracement is attached between wave 2 and wave 3. Okay, so there you have that. And then it comes back into this range, and this is the high probability 70% pullback area. Now, extra thing for you Elliott wave folks, a wave 4 cannot go into a wave 1. So if this is 1, this is 2, then this is the top of 1 here. And the retracement, even if it gets deeper into this lower 15% area, one of the rules, hard, fast rules for Elliott wave is it cannot go into the top or beneath the top of wave 1. And that invalidates the wave count. And it has to be something else like a larger 1 and maybe 2. But in this case here, all right, it's not close to unvalidating it. We solidly hit this target zone here. And so then we had a move off, we had a pullback where it held, and then a move off, and now we're getting another pullback. So my feeling on this is anytime you can get in and buy when a market pulls back into the target zone and the overall trend is not over, in other words, you're expecting another leg up, and in this case, a wave 5, you should take advantage of that, all right, and use that as a buying opportunity. And so even if crypto comes back down into the target zone, it could even make one more low and still be in the target zone. If it does that, this again is a buying opportunity. Now, weak hands will probably sell. All right, but this you should view as a buying opportunity because in the next move up, we expect to go here. All right, and you do have to have a stop at a certain area where you basically consider the analysis incorrect. So always use a trade size that allows you to put your stop at a level like that. Okay, don't have your trade size so high that your stop has to be too close, because the markets work in statistical probability. So it could go down a certain percentage below this, turn around. So you don't want to have your stop so close to that you don't allow for the liquidation or the manipulation of the weaker hands. Okay, so you got to kind of stay a little bit lower than that. All right, so that's kind of the way I would view that. And then your target for crypto is going to be up here at the fib extension, which is anchored here, here, and at the bottom of this 4, and that gives you this target zone here. And that's a 70% probability. And again, the 15% below that is going to be the top of wave 3, or the previous high. 15% of them are shallow there, and then 15% exceed. So if you get to this shallow 15%, but you break above the previous top, in this case with 3, then you may want to scale out a little bit if you see signs of weakness, and move your stop up a little closer in case that's all it's going to give you. But always try to stay, if you can, in the trend to some degree to make it to that 70%. All right. So I think that's kind of important. And you can see this on all time frames. Again, I showed you one on a 5 minute. You could find one on a 1 minute. You could go up to a weekly or a monthly chart and find these types of levels at all time frames. So regardless of the kind of trader you are, whether you're a day trader or a position trader, it really doesn't matter. So you can apply this. And now here, what's interesting in this situation here is we really had kind of a fairly straight move up with a little bit of consolidation here, but not a lot. All right, there was not a lot. There was a little bit of a consolidation here. And notice that if you took that range in there, and I'll just probably range it from here over here to roughly here, all right, you're smack in the target zone. So notice how we came into that range area of consolidation here, where it kind of was a little bit range bound, up, down, up, and then it went. All right, notice that here, all right, corresponds to where that low was here. So it's kind of interesting how that works out, and you'll find it works out a lot. All right, so now there we are. Our next realm of big consolidation, of course, is right here. All right, so if we break out above here, this will become a longer term consolidation area. Okay, so if we reach a wave 5 and we sell off, if it bounces along here, all right, and then goes up again, all right, you may still be in wave 5. But if it breaks through the bottom of this, then of course you're in a next move to the downside, and this consolidation will be resistance. And again, I'm using GBTC, which is a crypto, but it could be any market. So target zones are really important, and I find fibs a great tool for that, as well as looking for areas where the market basically is range bound, even during a trend. All right, because whichever way it breaks out of that, then that range bound area, if it breaks to the upside, becomes support. If it breaks to the downside, it becomes resistance. All right, so that's kind of what I wanted to go over today. We're only here for about a half an hour. I wanted to keep it pretty basic, but at the same time, something you could leave here with and start using. Any questions on that? One thing too is Gene mentioned we're going to have the tutorial, private tutorial here in Tucson next year, probably January, maybe February, but right in that time frame, early next year. And we will be trading the live markets, and you'll see all this kind of these tools and these things we talk about with price action using the ART software. You're going to see all of these traded on different time frames during the Tucson tutorial, and it's really a great time. It's also a nice time because I get to meet everybody. You know, in this digital world, we kind of know everybody digitally, but different when you get together personally and we go over it, and questions are great. So it's really a good time. We've done a bunch of them before. So if you can make it, I think it's money well spent, and we'll send you guys an email when that's going on. All right, so I'm going to be doing the live update on the markets and the real estate market in about an hour. All right, I do that once a month, the first Wednesday of every month. So I'll be doing that then, and that's on our YouTube page and our channel rather. And other than that, I will see you guys next week. Thanks so much for being here. Good turnout today. All right, thank you.